Hello, good morning, and welcome to the Stephen Carlson Show. I'm Stephen Carlson. This is part 2 of my video series short dedicated to the men and women of public safety with tips and advice for cops, firefighters, and paramedics on how to retire wealthy. Now, in the first video, we covered how to get your budget in line, how to get yourself out of high-interest debt, and to start the process of getting your retirement account set up. So if you haven't already watched that video, go ahead and pause this video, go back, watch that one, and come back. Okay, so you've watched video 1 now, right? Okay, great. On to today's content. But first, please make sure you like, subscribe, and comment to my video. Doing so really helps with the YouTube algorithm. Alright, now to start off, I took the average national pay for law enforcement, patrol officers, not investigative or supervisory, patrol officer, average pay for EMTs and paramedics, and the average pay for firefighters from the U.S. Bureau of Labor and Statistics. Of course, as you guys know, pay varies throughout the nation. So the best I could do is come up with a national average. You might need to adjust your calculations based upon your area. Nationally, emergency room RNs make about $73,000 a year. Law enforcement, about $65,000. Firefighters make about $50,000, and sadly, for my EMS friends, you guys, we get the least. $39,000 is the average. Now, I think the EMS numbers are skewed as they average both EMT and paramedic salaries together, but honestly, that's the best of the statistics that I could get for you. For this video, I averaged all of these industries together to get an average about $57,000 per year. Now, that is the number I'm going to use working throughout this video. And I took the average American household expense of about $5,100 per month. Now, don't worry, there's not going to be too much math, so even my firefighter friends, you guys can keep up. Okay, just to recap, in case you guys got lost, the average frontline public safety worker makes about $57,000 a year. That comes out to about $4,700 per month. Now, the problem is the average American household spends $5,100 a month. Yeah, Houston, we got a bit of a problem. Now, of course, these household expenses in many cases include a spouse also contributing monthly income. So for the rest of my calculations here, I'm going to presume that either 1, you have a spouse generating additional income, or 2, you found a way to live below the average household expenses of $5,000 per month. Or 3, that you've got a side hustle generating a little bit extra money. No matter how it works out for you, my calculations show you should have about $500 per month to invest for your retirement. Okay, that's great and all, but what should I do with this $500 per month? First off, if your employer offers a 401k or some similar type of retirement account, they provide matching funds. So if you put in money, they put in money. I would suggest that you max out whatever their matching offer is. Now, a generous employer may match your entire contribution for dollar, or 100% contribution. Other employers may only contribute 50% of what the employee contributes. You just need to check with your HR department to find out. Now, like I said, many employers have a maximum percentage that they're willing to contribute. And depending on the employer, it's usually about 5%. The best way to find out, like I said, is check with your HR department. Find out what your options are, whatever it is, completely max it out. Because the money your employer is giving you, that's free money. But once you've maxed that out, do not contribute additional. The reason is many 401ks have seriously high annual fees and are very poorly managed. Now, yes, of course, there are some that are great, but the problem is many of these, they're selected by your employer, and usually the employer opts for the cheapest plan to implement, and that kind of leaves you with less options. All right, so now that you've maxed out your 401k, let's focus on my favorite investment strategy, the Roth IRA. Now, I've already covered Roth IRAs extensively in a few of my other videos, like the video, Is Meet Kevin Wrong? React 3 Reasons Why I Won't Use the Roth IRA. You should check this out. The link will be in the description below. But for a quick summary, this is a specific type of investment account that allows you to invest money from your paycheck, and any profit that is derived from this investment is completely tax-free when you take it out in your retirement. Now, I suggest using Webull because it allows you to open up a Roth IRA account, set up automatic monthly deposits of $500 per month. Why do I like Webull? Couple reasons. One, They're really awesome, and they give you 2 free stocks just for opening your account and depositing $100. And one of those stocks could be worth up to $1,400. That's free money. It's stupid not to accept it. Now, as long as you continue with your automatic deposits, after 40 years, yeah, I know that sounds like a really long time, but honestly, if you're in your 20s, typically the earliest that you can withdraw from your IRA without penalties is 40 years anyways. So after your 40 years, you will have invested about $240,000 into your retirement account. But, and here's the great part, it's now worth $1.5 million completely tax-free, courtesy of Uncle Sam. Now, the IRS does cap you at $6,000 per year in which you can put into your Roth IRA. That comes out to precisely $500 per month. Keep this fact in mind, but kind of put it aside for a moment. We'll get back to it. Now, if you can squeeze an extra $100 a month into your investment, go from $500 now to $600, after the same 40 years, you will have contributed an extra $88,000 into your investment. But you know what? That $88,000 you put in there brought you back $300,000. Now your retirement is worth $1.8 million. Now, if somehow you can fight to get $1,000 per month into your investment, once again, after your 40 years, you know how much money that's worth? $3.1 million. There'll be a link down the description below to investor.gov. It's a really cool calculator where you can put exactly your numbers in there, and you can get a pretty good idea of what the compounding growth rate will be over a certain number of years, 5 years, 10 years, or in this case, 40 years. Remember, I said that you could put a maximum of $6,000 per year into your Roth IRA. This is true, so you're capped at your $500 per month. But that doesn't mean you can't put $100, $200, or more into a standard brokerage account, which, once again, Webull allows you to do both, all within your account. Now, of course, this second account is fully taxable, and you will not get the tax-free benefits of this money. As we've been talking here, you've so far just deposited money into your Roth IRA, and none of this is actually generating you any money. You just put cash in there. So here's some advice on what you should invest in with your Roth IRA to generate some substantial income for yourself. I personally recommend that you invest in funds that track the S&P. Now, this gives you a very well-diversified account, and you're able to invest in multiple different markets. Personally, here's how I break down my investments. I put 60% into the Vanguard Total Stock Market Index Fund, 20% into Vanguard Total International Stock Index, and 10% into Vanguard Total Bond Market Index Fund. Now, you don't have to use Vanguard. There's also Fidelity, iShare, and multiple others that all track the same basic funds. I'll give you some suggestions down below. If anybody that's been adding up, that was only 90%. This leaves you an additional 10% of your money to invest in whatever you want. By limiting this to 10%, it also limits the stupid mistakes of investing all of your money into one company, keeping everything nice and diversified. For example, in my investment portfolio, I foolishly decided to buy Boeing at $330 a share, which is now trading for $131 a share. Damn, that really hurt. Anyways, I lost about $3,000 in that one stock alone. Hey, it is what it is. But luckily with my other investments, I'm still up. Now, a bonus tip for you, place stocks for funds that pay dividends into your Roth IRA, as opposed to your regular taxable brokerage account. As one thing you need to know is dividends are taxed at a much higher rate than average income. So by taking these extra earnings and placing them into a tax-free account like your Roth IRA, you will save a lot of money in the long run. Thank you very much for watching this video. I really hope you enjoyed it. Please make sure you like, subscribe, and comment. I will see you on the next one.